Welcome back, everyone. This is the space where we learn about crypto step by step with clarity, patience, and purpose. Today, we're diving into one of the most talked about privacy coins, Zcash. Some are calling it the next Bitcoin, and many are asking, when is the right time to buy? In this breakdown, I'll share the key price zones I'm watching on the weekly, daily, and 4-hour time frames. Because in crypto, one rule always holds true: patience makes profits. So stay tuned. Let's dive in. First up, the weekly chart. When you see a powerful surge with tall green candles, it means the big players are active. Market makers are stepping in with heavy volume, driving the price higher, faster than usual. But remember, what goes up fast usually cools down fast too. After strong rallies, price often retraces towards short-term moving averages. Right now, the two levels that matter most are the 5-day and 13-day EMAs. If Zcash pulls back, I'll watch how it reacts to that 5-day line. If buyers fail to hold there, price could drift down to touch the 13-day EMA before stabilizing. That's not a crash, that's a reset. And in crypto, resets create opportunities. Now, let's zoom into the daily time frame. Zcash has already slipped beneath the 5-day EMA and is heading toward the alpha trend line. This signals that momentum is cooling and the market's preparing for consolidation. To identify realistic retracement zones, I use the Fibonacci tool. If we pull it from the swing low near $34 to the recent peak, the major retracement zones are 0.382, 0.5, the golden pocket, 0.618, and 0.786. These levels often mark where price rests before another leg up. Right now, the 0.5 zone around 160 per ZT looks like a healthy potential rebound area. Some may think it's impossible for price to revisit those levels, but that's not how markets move. They breathe, they retrace, they reload. Let's be practical about entries. Here's how I'm planning it. First buy zone around $230, second near $160, third around $112, final dream entry to around $66. That's where I'll begin scaling in using a simple DCA approach, buying gradually, never all at once, because discipline beats hype every single time. On the 4-hour chart, things get interesting. Price is now trading below the 50 EMA, which signals short-term weakness. Usually that means price will retest the next strong support zone, which aligns perfectly with that $160 region. So yes, more downside could come first, but that's not bad news. That's the setup for the next wave. Smart traders don't panic during drops. They prepare their positions while others react emotionally. Let's talk mindset for a second. In crypto, one rule has never failed me. If you don't understand the project, don't buy it. When I first discovered Zcash years ago, I waited, not because it wasn't promising, but because I didn't yet understand it deeply enough. That decision saved me more times than I can count, because when the market dips, and it always dips, only conviction keeps you from panic selling. So take the time to study, understand what you're investing in. Confidence comes from knowledge, not luck. Here's the big picture. I'm waiting for Zcash to cool off and return into its balanced zones. 233s, 160, 112, while others maybe even $66. Those are my key levels. When it gets there, I'll DCA. Step by step, no rush, no fear, just strategy. Until then, I'll keep watching the charts, tracking volume, and waiting for the right moment. You can find Zcash across most major exchanges like Bybit, OKX, MEXC, Binance, and others. And if you want to learn this kind of analysis step by step, find a good trading community that values patience, discipline, and clear strategy, not hype. Because learning with the right people makes all the difference. That's it for today's breakdown. Remember, you don't have to chase every pump, you just need one good plan and the patience to stick to it. Wait for your levels, trust your strategy, and let the market come to you. Thanks for watching, and until next time, stay patient, stay focused, and keep learning.